It's great to be here. I was going to use my 15 minutes to talk briefly about the development of RMB as a currency, and then also talk a little bit more on the bond side. But I just realized Mr. Ball's presentation is far more informative and definitive. So I think I need to quickly restructure my presentation. Probably going to focus a lot more on the fixed income side now. Okay, we start with a question. Is RMB going to be the next international currency? I think this used to be a very big question, and but as time passed on, at this point, the answer is becoming more and more clear to all of us. And come to think of it, I guess the fact that we're all here in this room talking about it is a pretty positive sign. So personally, I'm very optimistic. Okay. This bit, I think Mr. Ball talked about it very adequately before. The development for the past few years, RMB has really made great progress as a payment currency, a trade finance currency, investment currency, and also as a reserve currency. We can just see for the past 2 years, from 2012 as a payment currency, RMB was ranked number 20 in the world with only 0.25% of market share. Just in 2 years' time, it has gone to the 7th place. With about 1.6% market share, and then we've just learned earlier that this year we've already got to the 5th place. Obviously, from 5th to number 1, there's still a very, very long way to go, but nonetheless, the progress has been quite remarkable. During all of this development, central bank's involvement obviously is very, very critical. And then we also talked about it, 32 central banks now have signed bilateral currency swap agreement with People's Bank of China. For fixed income guys, I think this is very, very important because these bilateral currency swap agreements really provides the sort of the backstop of liquidity support for these respective countries and regions. So very, very important facilities to have. Fast forward a few pages. So what's going on in the policy and market development? I think we would all agree that without policy reform, without policy implementation, market development simply cannot happen. So a few of the major milestones for the offshore RMB market, we break it down into basically 4 phases. Phase 1 is the retail RMB banking service. This started with, in 2004, we saw the first introduction of RMB retail banking service, including deposit taking, remittance, currency conversion, and bank card services. And then in 2007, it was the first issuance of offshore RMB bond in Hong Kong, which really gave birth to the dim sum bond market. From there, we move on to phase 3, which is cross-border RMB trade settlement. And we're sort of in the phase 4 right now, where it's the continuing increasing of depth and breadth of this market. Okay. So on the policy front, obviously, the current account has been fully liberalized. And then we're making great progress on the capital account front. So what do we think? What do we think at Bank of China of the outlook of RMB internationalization? We truly believe that global use of RMB is gathering pace. And apart from the strong position in Asia Pacific, we are now seeing a lot more Western developed countries are gaining momentum in participating in the RMB community, which is a very encouraging sign. Capital account liberalization, again, will be the next policy focus. Foreign investors are gaining more access to China's capital market. And so overall, to answer the original big question, I think we do think that we are on track to be a global reserve currency. But Mr. Bao again adequately pointed out it could take another 100 years, but we're getting there. So now let's look at the bond market a little bit. We'll first look at the onshore bond market. So really, right now in China, we have 3 platforms for the onshore bond market, and one is the retail OTC market, and then we have the interbank OTC market, and then thirdly we have the exchange market. All of the 3, you can see from the pie chart over here, the interbank OTC market really is the predominant platform, with over 93% of domestic bonds traded on that one particular platform. And with all the outstanding domestic bonds, we have 37% in government bond, 35% in policy bank bond. So interesting to point out over here, corporate bond only consists of 10% of the whole of Chinese bond market. But again, very interestingly, this 10% is probably attracting 90% of the attention, because recent years everybody's looking at how the Chinese corporate bond market is structured, and then there's a lot of discussions about whether we're priced correctly, given the various reading standards. So it's a very interesting topic. Okay, for the investor base, again, the interbank OTC market has the most diverse and most active investor base, which include commercial banks, onshore foreign financial institutions, securities companies, insurance companies, and then also what we call the three types institutions scheme. Those include foreign central banks, RMB clearing banks, overseas participating banks. And also we have the QFIs and RQFIs, all in this interbank OTC market. Trading volume has been, we've really seen phenomenal growth over the past many years. This is just a very sort of quick example, like by December 2014, basically 1 year we've achieved 8.5 trillion in trading volume for the onshore bond market. This is a very clear indication of a fairly healthy liquidity situation for the RMB onshore bond market. Okay, again, another very big component is the overseas participants in the domestic interbank market, and then right now we have over 100 institutions, and then we see the number growing very rapidly. Okay, now the offshore RMB bond market. Again, this is probably like being from Bank of China, Hong Kong. This is probably the most close to heart to me, and we are very much the first institution that's getting the offshore bond market started with issuing the first dim sum bond in 2007. Again, very rapid growth. If you look at the top chart over there, from 2007, when we issued the first dim sum bond in Hong Kong, that year the total issuance for dim sum for offshore RMB bond was 10 billion RMB. And then 7 years later, in 2014, last year, we've achieved 202 billion in issuance. That's roughly over 170 deals. Amongst those, RMB sovereign bonds and quasi-sovereign bonds together account for more than 30% of the offshore RMB bond issuance in 2014. One of the key contributors to this fast growth market for offshore RMB bond is really the fast accumulation of offshore RMB liquidity. As of November 2014, Hong Kong RMB deposit have reached RMB 974 billion. This represents a 13% increase from year-end 2013, and over 4,000% compared to 2007. So again, rapid growth and with liquidity, obviously, on the currency side, it translates to the bond market. What do we think about the current offshore bond market at this point? Obviously, we just mentioned 2014 was a very, very big year. 172 issues, 202 billion in total deal size. So far this year, we've seen activity slowing down a little bit. This has a couple of factors. One being the increased two-way volatility for RMB exchange rate, which many can argue is actually a very healthy development. Another thing is a tighter offshore RMB liquidity. We're seeing our view right now is for the starting from mid-year to second half of this year, we're bullish again for the dim sum bond space. Given again a couple of other reasons. One is we see refinancing needs is still very strong. At this point, there's 22% of outstanding dim sum bond maturing this year, so that's a clear immediate refinancing need. And then for the further 55% of outstanding bonds maturing for the next in 2016 and 2017. So that's a very big demand, which we see will really keep the activity, pick up the activity quite fast. Another thing is the currency swap market right now is very favorable for issuers. We see the dollar CNH, euro CNH cross-currency swap continue to edge higher. Over here, this is a very interesting look at the offshore bond market right now. Like on the one side of the chart, we see like it's essentially the offshore RMB bond market is becoming more and more mature. Just from from the credit structure, we've essentially already established a full credit structure, looking from the AAA space to the high yield single B area. So we have issuers that fill up the whole spectrum. Obviously, the single A area is predominantly the most issuance we see. On the other side, you can see like the current bond curve is also fairly complete with the front end, the intermediate part of the curve, and also the long end. Also over here, we can see the 3-year part of the curve is very active. It takes up 47% of all issuance. This has a lot to do, again, with the swap market. At this point, US dollar CNH swap market and Euro CNH swap market is most active in the 1-year to 3-year space. So this gives the issuers a lot more incentive to issue in this space, given once you issue in RMB, if you need to, you can swap that back out to Euro, back out to US dollar, and you have that liquidity in the swap space. This is continue look at the market's development. At this point, Chinese and Hong Kong issuers are still the primary issuers of the dim sum bond space, accounting for 60% of total issuance from 2007 to 2014. In addition, we are seeing an increasing number of supranational sovereigns and the multinational corporations are making the entrance into the dim sum bond space. This is finally, I want to just give everybody a more sort of a hands-on look at why does it make sense to borrow in the offshore CNY bond market. This is a few names we picked. That's the current issuers in the dim sum bond space, and also in their respective Euro and US dollar currency. You can see the few names we picked. They go from a double B names to single A names. If we just look at runout on the top, it's a double B credit. We picked two bonds that they have currently outstanding in the market. One is their RMB bond runout 16th, and then the bottom one is the Euro runout also 16th. So duration-wise, it's the exact same duration. If we swap their yield, their current market yield, back out to 3 months LIBOR, you can see it's essentially the same yield. So the Euro bond is 3 months plus 110 spread, and then the RMB bond is 3 months LIBOR plus 118. So what this say is that for credit like runout, they can borrow in the RMB space or they borrow in Euro. Essentially, their funding cost is the same. And then this gets even better once you move up the credit structure from a double B space to a single A. The bottom one, Caterpillar. Caterpillar, we also have two examples over here. Caterpillar 17s. The 3.417s is RMB denominated offshore bond. And then the CAT 12517s is the US dollar bond. Again, same duration. We swap them out to LIBOR funding. And you can see that's a distinct advantage where the RMB bond is at LIBOR, 3 months LIBOR minus 6%, minus 6 basis point, and then the US dollar bond is LIBOR plus 8.7. So essentially, by borrowing in the offshore RMB market, Caterpillar can achieve a LIBOR minus funding. So for any company, I think that's a good thing to have. Yeah, that's my presentation. Thank you very much.
Yeah, thank you very much for this very interesting presentation. Now I give the floor to Ms. Yan Li from ICBC to also deliver her presentation.